Turning to total company online sales leveraging our digital platforms increased approximately 4% compared to the second quarter of last year. And for those customers that chose to transact with us online during the second quarter, nearly half of our online orders were fulfilled through our stores. In addition, during the second quarter, we expanded our partnership with Instacart to improve the interconnected shopping experience nationwide. While we are still in the early days of our expanded partnership, we are encouraged with the results we are seeing. During the second quarter, we leaned into products and projects that are resonating with our customers. We updated some line structures focused on innovation and continued to deliver a compelling value proposition while focusing on the customer experience. For example, we upgraded the durability of all life-proof vinyl plank while also introducing on-trend colors, patterns, and lengths. This helped drive positive comps in the category for the quarter. We updated some line structures. Water heaters, we recently modified our line structure to better serve the pro customer needs. We simplified our value proposition, adding new and better features, which drove increased engagement in the category. And in paint, we continue to see the benefits of the investments we are making around our products and our fulfillment options, including our in-store service and job site delivery capabilities with the pro who paints, driving continued share gains in the quarter. And finally, we continue to see tremendous success in our outdoor power equipment categories, driving both positive unit and dollar comps in the quarter. As we've mentioned before, we have built a strong competitive advantage with our extensive lineup of battery-powered platforms that allows us to continue to grow share in these categories. As we look ahead to the third quarter, our merchandising organization remains focused on being our customers' advocate for value. This means continuing to provide a broad assortment of best-in-class products that are in stock and available for our customers when they need it. We will also continue to lean into products that simplify the project, saving our customers time and money. That's why I'm so excited about the innovation we continue to bring to the market. This quarter, we are launching the first-to-market smart glass door with Feather River. Feather River is a leader in the fiberglass door market and continues to bring innovation to our customers. This new door technology allows customers to easily change the glass from privacy or frosted to clear with a push of a button and is compatible with our HubSpace ecosystem. This will be exclusive to the Home Depot and the big box retail channel. Additionally, we continue to lean in with our exclusive partner Milwaukee across the business and have seen great adoption of electrical hand tools. Our partnership is expanding with a broader assortment of made-in-the-USA tools. These tools provide a high degree of precision with lasting results for our pro customers and will continue to strengthen our position as the #1 destination for the electrical trade in the big box retail channel. With that, I'd like to turn the call over to Richard.
Thank you, Billy, and good morning, everyone. In the second quarter, total sales were $43.2 billion, an increase of approximately 0.6% from last year. Total sales include $1.3 billion from the recent acquisition of SRS, which represents approximately 6 weeks of sales in the quarter. During the second quarter, our total company comps were negative 3.3%, with comps of negative 3.7% in May, negative 0.9% in June, and negative 4.9% in July. Comps in the U.S. were negative 3.6% for the quarter, with comps of negative 4.1% in May, negative 1.4% in June, and negative 5% in July. In the second quarter, our gross margin was approximately 33.4%, an increase of 40 basis points from the second quarter last year, primarily driven by benefits from lower transportation cost and shrink, partially offset by mix as a result of the SRS acquisition. During the second quarter, operating expense as a percent of sales increased approximately 65 basis points to 18.3% compared to the second quarter of 2023. Our operating expense performance was in line with our expectations. Beginning this quarter, in addition to our GAAP measures, we are providing the following non-GAAP measures. adjusted operating income, adjusted operating margin, and adjusted diluted earnings per share, which excludes non-cash amortization of acquired intangible assets. We believe these supplemental measures will help investors better understand and analyze our performance. Our operating margin for the second quarter was 15.1% compared to 15.4% in the second quarter of 2023. In the quarter, pre-tax intangible asset amortization was $90 million, including $39 million related to SRS. Excluding the intangible asset amortization in the quarter, our adjusted operating margin for the second quarter was 15.3% compared to 15.5% in the second quarter of 2023. Interest and other expense for the second quarter increased by $61 million to $489 million due primarily to higher debt balances than a year ago. In the second quarter, our effective tax rate was 24.5% compared to 24.4% in the second quarter of fiscal 2023. Our diluted earnings per share for the second quarter were $4.60, a decrease of approximately 1% compared to the second quarter of 2023. Excluding intangible asset amortization, our adjusted diluted earnings per share for the second quarter were $4.67, essentially flat compared to the second quarter of 2023. During the second quarter, we opened 3 new stores, bringing our total store count to 2,340. Retail selling square footage was approximately 243 million square feet. At the end of the quarter, merchandise inventories were $23.1 billion, down approximately $200 million compared to the second quarter of 2023, and inventory turns were 4.9 times, up from 4.4 times last year. Turning to capital allocation. During the second quarter, we invested approximately $720 million back into our business in the form of capital expenditures. And during the quarter, we paid approximately $2.2 billion in dividends to our shareholders. Our disciplined approach to capital allocation remains unchanged. First and foremost, we will invest in the business and expect capital expenditures of approximately 2% of sales on an annual basis. After investing in the business, we plan to pay the dividend, and it is our intent to return any excess cash to shareholders in the form of share repurchases. Computed on the average of beginning and ending long-term debt and equity for the trailing 12 months, return on invested capital is approximately 31.9%, down from 41.5% in the second quarter of fiscal 2023. Now I will comment on our updated outlook for fiscal 2024. As you heard from Ted, given the softer than expected performance in the first half of the year and reflecting continued uncertainty around underlying consumer demand, we believe a more cautious outlook for the year is warranted. With the recent closing of the SRS acquisition, we are now including their results in our consolidated outlook for the year. For the period matching our first half, which includes periods prior to the acquisition and not fully reflected in our financial statements, SRS generated high single-digit percentage sales growth, with operating income growing largely in line with sales. We believe that over the next several years, SRS, on its own and through our combined pro efforts, will help accelerate sales and earnings growth for our company. Updating our fiscal 2024 guidance for the factors we just discussed, we now expect total sales growth between 2.5% and 3.5%, including the SRS acquisition and the 53rd week. The 53rd week is projected to add approximately $2.3 billion to total sales. SRS is expected to contribute approximately $6.4 billion in incremental sales. Comparable sales are expected to decline between -3% and -4% for the 52-week period. The high end of our range implies a consumer demand environment consistent with the first half of fiscal 2024. While comparable sales for the company are not currently on the trajectory for the low end of the range, a -4 comp implies incremental pressure on consumer demand beyond what we are seeing today. We expect to open approximately 12 new stores. Our gross margin is expected to be approximately 33.5%. We expect operating margin to be between 13.5% and 13.6%, and adjusted operating margin to be between 13.8% and 13.9%. Our effective tax rate is targeted at approximately 24%. We expect net interest expense of approximately $2.2 billion. Our diluted earnings per share percent will decline between -2% and -4% compared to fiscal 2023, with the extra week contributing approximately 30 cents. We expect our adjusted diluted earnings per share percent to decline between -1% and -3% compared to fiscal 2023, with the extra week contributing approximately 30 cents. We believe that we have positioned ourselves to meet the needs of our customers in any environment. The investments we've made in our business have enabled agility in our operating model. As we look forward, we will continue to invest to strengthen our position with our customers, leverage our scale and low-cost position to drive growth faster than the market and deliver shareholder value. Thank you for your participation in today's call, and Christine, we are now ready for questions.
Thank you. We will now be conducting a question-and-answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. Thank you. Our first question comes from the line of Scot Ciccarelli with Truist. Please proceed with your question.
Good morning, everyone. So it sounds like you guys are seeing a bit more of a shift towards, let's call it, broader consumer weakness from what previously seemed to be hesitancy around finance projects. Can you provide a couple of examples just so we can better understand, kind of the incremental hesitancy on consumer spending patterns?
Well, I think it's just in broader projects, Scott. As we said in the prior few quarters, the consumer remains engaged. Our consumer in particular remains quite healthy. Again, these are consumers who have seen their home values go up 50% in the last 4 years. Their home equity has increased almost 70% since right before the pandemic, so that translates to over $13 trillion. Equity values have been strong, jobs are strong, earnings are strong. But we saw engagement the last several quarters in smaller projects. What we saw this most recent quarter is further pressure in larger projects. And we see that in building materials, in lumber, categories that are very specifically tied to construction in a larger project. And that was really the change that we saw as the quarter progressed.
So in other words, it's not necessarily broadening out, but it's increased pressure on, let's call it, project-oriented purchases.
Yes, and you said it. I mean, the change that we believe happened over the course of the quarter is if you go back a bit to the environment that we've been working through, this period of moderation, the first thing we saw was a shift in spending, PCE spending, from goods back into services. And we're effectively through that transition. The relative share of spend is more or less equal to where it was before the pandemic. And then we had certainly some pull forward in our segment. I'd say we're not completely through the pull forward, but largely. I mean, we're now going on 4 years from the first spring of the pandemic when people were buying, lots
2
of
minutes to
grills
go before the
and
market
patio
opens. Tap the
furniture,
like
et cetera. We're
and
largely working our
consider
way through
subscribing to the
that.
channel.
And then the higher interest rates started to impact.
Inflation, PPI came down today. It was a great day. Let's see how the market opens.
Particular, which is down, some 40%. And I think last month, we saw numbers that on an annualized basis were approaching 40-year lows. That's also impacting customers' interest in financing larger projects. Everyone's expecting rates are going to fall, so we're deferring those projects. But again, what more recently has happened is a broader concern with the macro economy. There's just a lot of noise with political and geopolitical environment. Unemployment ticked up. Inflation keeps eating away at disposable income. And I think people just took
just under a minute to go
as we progress through the quarter, or more of a pause because of these macro uncertainties.
Got it. Very helpful. Thanks, guys.
Thank you.
Our next question comes from the line of Seth Sigman with Barclays. Please proceed with your question.
Hey, good morning, everyone. I wanted to ask about just performance across different channels. So core Home Depot retail, I think that's pretty clear, but Home Depot or HD Supply, it seems like it's outperformed, but kind of hard to tell from our side. And then on SRS, if you can maybe just elaborate more on the trends you're seeing there. As you step back and think about, hopefully an eventual recovery, you've built up this very diverse business over the last few years. I mean, how do you think about the timing of these different segments and how they come out of this?
Al's gone.
Sure. So, well, I tell you, we're very proud of all components of our business. We are executing at an exceptionally high level across the core and across the businesses that you call out. While we don't split out HD Supply as part of our core, we are proud to say that we have had, and HD Supply has had an exceptional track record as of late, even penetrating through to generate positive sales growth in the second quarter. And so that's a real bright spot for the Home Depot. SRS, as we told you when we acquired SRS, this is a growth company acquiring a growth company. SRS has a track record of growing faster than their competition in all of their verticals and has done so for the last 15 years. If you look at what SRS accomplished in the first 6 months of the year, again, we only own them for 6 weeks, so we only book 6 weeks of results. But they grew in the high single-digit percentages in the first half. They had healthy growth in the second quarter, and we expect them to again book single-digit growth in the entirety of the year 2024, even though we'll only own them for 7 months. So, these two business models, HD Supply and SRS, are great examples of market leaders who are accustomed to growing share and delivering the bottom line as well.
Yeah, and I'd add to that, Seth, we're not going to break out operating segments, but in HD Supply's case, there's some appropriate comparatives. In SRS, there's very much publicly traded comparatives, and we feel really good about the MRO business, the roofing, the pool, and the landscape business against those comparables.
Okay, that's super helpful. And then if we just zoom back in on core Home Depot, maybe just speak about your relative performance, if there are categories that you may be seeing some widening gap. You called out a number of categories that seem to be under a lot of cyclical pressure, but were cited as bright spots, outdoor power equipment, You mentioned appliances above average. Obviously, that's been a tough category. I think you even mentioned vinyl plank having positive comps. So maybe just speak to some of those categories and where you may be seeing that widening gap. Thanks.
No, thanks, Seth. So it's Billy. Listen, as I did mention in our prepared remarks, and we continue to talk about, the finance projects, we continue to see ongoing pressure. I don't think that's new news. Having said that, we called out a number of businesses. You just mentioned it. Vinyl plank, we saw great performance in both sales and unit comps. Water heaters, as I mentioned. Certainly paint. We're thrilled with the efforts we've had in paint with the pro that paints and our paint business in total. And again, power across our platforms as well. So, non-finance projects, while, we did see some softness in some of the seasonal pieces that we alluded to in our prepared remarks, the continued ongoing pressure of just the uncertainty, as it relates to interest rates is going to continue to put some pressure on those finance projects. But we're pleased with some of the other pieces I mentioned, larger ticket, one-time purchase categories like riders as an example. We continue to see, good engagement, in businesses like that as well.
Thanks, guys.
Our next question comes from the line of Michael Lasser with UBS. Please proceed with your question.
Good morning. Thank you so much for taking my question. What do you think the key level for the 30-year fixed rate mortgage needs to fall to in order to drive Home Depot's business higher? And does that rate change or that level change if the decrease in rates is due to an erosion in the labor market rather than just a moderation in inflation?
Hey, Michael, good morning. Full question there. Hard to pinpoint what that magical rate number is, historically, and then, as you say, with some added pressure. All I can do is reference toward the end of last year when rates, came off, the highs over 7 and moderated down, I think even hit below 6.5 there for a bit. You saw an immediate increase in housing activity, mortgage applications, mortgage refi applications. And then, unfortunately, the rates spiked back up, I think almost to 7% again. So we're trending down again. I think you're approaching 6.5% for qualified mortgage. And based on what we saw toward the end of last year, we would think you're approaching a level that people are going to engage. Caveat to that would be, again, this broader, economic, geopolitical even concerns that people still might pause a little bit until some of this gets sorted out, which would be understandable. But as rates head down, towards 6, we would expect to see activity. The other thought or piece of this whole puzzle is the amount of folks, as you know, who are in mortgages as low as 3%, plenty of mortgages under 5%. There's definitely a little bit of a golden handcuff dynamic going on with those rates. But again, as time goes on, family dynamic changes. And for 1 or 2 years, you might, stay in those golden handcuffs and enjoy the low rate. But family size increases, household formation, moves for employment, retirement, et cetera. So we would see a gradual unlocking of that, even if that adds to a little bit of a delay response to housing from a traditional, rate cut environment.
Okay. Thank you very much. My follow-up question is, the longer that this downturn persists, does Home Depot have an inclination to invest more in price or value as a way to grab market share that it could sustain on an eventual upturn? And maybe as a part of this, could you pull apart your updated gross margin guidance to reflect the underlying dynamics within core Home Depot versus the influence of SRS on this line item? Thank you so much.
Yeah, Michael, thanks. I'll take the first part of that, and then I'll hand it to Richard on the second piece of that question. As it relates to just the promotional activity, Listen, we're going to continue to drive innovation and create value for our consumers. We are in a very rational environment as it relates to the home improvement sector. While there's been some pressure in a category like appliances, we don't see the need nor are in the environment where we need to be more promotional. We're focused on driving innovation and value, creating opportunities for our customers to come into our stores every day. We don't want to be in the promotional business. And we feel very good about our position in creating these opportunities and excitement in our stores around just those things. And we've seen great adoption. We've been able to bring value into the marketplace. Areas like our proprietary brands continue to perform very well, and we're very pleased with that and don't see a change in really the promotional cadence going forward. Now, I'll toss it to Richard more on the gross margin piece.
Yeah, great. So let me actually broaden the question, because I think it's important to give the broader context. If you're asking about gross margin, let's just talk about SRS for a moment. So in last June's investor conference, we laid out a base case, and we said that there could be contributors to that base case that would push us to grow sales and earnings faster than that base case, right? So base case was 3 to 4% top line and mid to high single digit EPS growth. The acquisition of SRS is one of those accelerants that we pointed to in our investor conference, pushing us towards the accelerated case. The objective of SRS is to grow our share with the pro, to accelerate sales growth, to accelerate operating profit growth, and to accelerate EPS growth. So from a sales and operating profit perspective, as you can see, it's already contributing to our company immediately. From an EPS perspective, the acquisition of SRS will be cash EPS accretive in the first 12 months of ownership, as we said in March. It will be cash EPS accretive in the first 12 months of ownership, adjusting for the associated non-cash intangible amortization. So let's talk about how SRS is reflected in our financials. And again, just as a reminder, we include 6 weeks of results in Q2 from SRS, and we will include about 7 months of SRS in our full year. So just thinking about SRS, look, they have a different product mix than Home Depot, right? About 2/3 of their product is roofing, and then the remaining third is in pool and landscape. SRS carries similar margins on similar products as the Home Depot. Those products carry a lower gross margin rate than the Home Depot's company average, but their margin simply reflects a different mix than the Home Depot. And so when we think about gross margin, SRS impacted the second quarter gross margin by about 35 basis points. And if you think about what that means for kind of an annualized figure, you're talking a kind of a reset of our margin profile of about 45 basis points in gross margin. So again, that'll be about 35 basis points for 2024. And then if you look at sort of an annualized figure, it's somewhere around 45 basis points. That's kind of a reset to reflect what is in effect a new mix of product at the Home Depot. So now let's talk about operating margin and SRS's impact, because it's important to look at gross margin in that context. So when you add SRS to our mix, it adjusts our base operating margin profile, lowering it by about 30 basis points in Q2, and it lowers our base operating margin profile by just about 40 basis points for the full year of 2024. So that's 40 for the full year of 2024. Again, if you annualize that number, then the adjustment to our base margin from SRS is about 60 basis points for an annual period. And those are GAAP numbers. and we can get into adjusted numbers if you'd like. When we think about gross margin, again, for the quarter, we want to point out several exceptional performances across our operators. First of all, significant transportation benefit brought to us by our supply chain partners and our merchant partners, and significant benefit from a decrease in shrink year over year. We have now put several quarters of shrink benefit versus last year together in a row, and we can point directly at what drives that performance. It's a fantastic team that we continue to invest in, and the returns on those investments are exceptional. That's a long way of saying, if you look at our gross margin performance year over year, and you back out the SRS mix shift of 35 basis points, we were actually 75 basis points versus last year. An exceptional performance in gross margin across the board by our entire team.
Thank you very much and good luck.
Thank you.
Our next question comes from the line of Simeon Gutman with Morgan Stanley. Please proceed with your question.
Good morning, everyone. I have a question related to reversion. One way to look at it since 2019, if we look at transactions, they look like they're flat to down a little bit. So to Ted's point earlier, most of that looks like it's given back on transactions. Ticket, though, is still up about 30-ish%, 34. So, and I think that's a function of the number of items consumers were putting in the basket and because there was inflation. My question is, if we look at just the inflation piece, are there any signs of product prices, either deflating, disinflating, the non-commodity stuff, non-lumber, any signs of pricing changing in the channel? Thank you.
No, Simeon, thanks for the question. Your math is sort of spot on there. The good news is no, we're not seeing any broad step down in cost or retails. If you look at what we've laid out for AUR this year, we said that we'd have pressure of about 150 basis points of AUR in the first half. That would moderate to 50 basis points in the second half. That is all a function of lapping the cost and associated retail moves from last year. There really isn't a lot of net new activity on the cost or the retail front. In fact, sort of cost out and in cost in activity, we have a very robust team that works with our merchants on this. It's all pretty neutral right now, or not a ton of activity. So as Billy said, we're not going to be promotional. We're an EDLP retailer that has to give value to particularly our pros every day. The cost environment is neutral. The price environment is neutral. We're not seeing a lot of trade down in particular. We're not seeing an increase in OPP penetration. Things are pretty neutral to several last periods of activity. And what we're seeing on the AUR is a matter of lapping. So we're not seeing that, and we would expect the cost levels from where we are today to largely hold, as well as the retail levels. Remember, there's, in the cost levels from our supplier base, it's not just a matter of, input costs in terms of materials, which you understand with our cost finance team, we have a very, very good view into that. But everyone over the last 4 years has seen significant increase in labor costs, and we're still working through transportation costs. So that 30, you can say, wow, that's highly inflationary and that has to come back. Well, in fact, the cost structure, with labor being a big component, has increased similarly, and that's why we don't see the marketplace irrationally eroding those price levels.
Okay. Follow up, trying to think about what the core business is doing in terms of decremental margins in the second half. I think some of Richard's comments before gave us some more clues, but it looks like the EBIT dollar guidance of the whole business dollars are roughly the same. We have a midpoint now. We had a one single point before. So whatever we're losing from the core, it seems like we're picking back up in SRS. And it looks like the decrementals are somewhere around 20 to 25%. Is that right? Is that the right run rate if this sort of negative comp or low negative comp environment persists?
So what I would do is why don't we talk about performance to date and how our guidance reflects the performance to date, because we actually have, as I said, outperformed certain expectations in cost of goods sold, and the team has managed expenses in an exceptional manner. And so let me walk through what that means for the guide. So you can recall we began the year with a guide of a -1 comp with a 14.1% operating margin. In isolation, if we were to take, as we take comp from a -1 to a -3, that is, call it 25 to 30 basis points of natural deleverage that we would see in that reduction in top line expectation. However, we've had favorability year to date. We know where it comes from, and that favorability enhances our earnings. And so instead of taking our 14.1% operating margin, and by the way, I'm excluding SRS in this discussion, so for simplification, if we were to set SRS to the side for a moment, naturally our 14.1 operating margin would drop to something like a 13.9 to a 13.8 at a -3. Instead, at a -3, again with SRS to the side, we are now guiding operating margin of 14%. So we have held, in essence, that core 14% operating margin at a -3 comp. That's because we are flowing through benefits that we have created through investments that we've made. Now, if we include SRS in this, obviously, as I said, there's about a 40 basis point mix shift in our operating margin base. So that 14 becomes the 13.6 that we've guided alongside the -3 top end of the range today.
I got it. Makes sense. Thank you.
And just to tie it all up together, that 13.6 corresponds with our adjusted operating margin of 13.9%. So for the year, when we eliminate non-cash amortization expense on intangible assets, we expect to report operating margin of 13.9% on a comp of -3.
Thank you.
Our next question comes from the line of Chuck Grom with Gordon Haskett. Please proceed with your question.
Thanks. Good morning. You guys talked about SRS revenue growth in the high single-digit range year to date, which is really strong in this environment. I'm curious, what's driving that success? Were there some acquisitions made by SRS? Has it been all organic? And I guess how do we think about that growth rate as we move into 25?
Thanks, Chuck. Yes, they remain a robust share-taking grower, and that high single digit is roughly equally split between organic growth and lapping of acquisitions.
Okay, great. And any thoughts on how the pace of that will go into 25?
Yeah, we wouldn't give any guidance into 25, but remember their mode of growth, which they have demonstrated this since inception in the mid-2000s, is there a balanced grower between comping their existing branches, their open base of branches, opening greenfield branches, and then some roll-up M&A, geographical customer list add-ons. So that's the profile that they've grown for years, and that is exactly the profile that we will support going forward.
And just for clarity's sake, SRS is not in our comp base, and so they are not reflected in our comp sales guidance. They will become comp once we've owned them for 12 months.
Okay, that's helpful. And then Richard, you've talked about the consumer deferring projects over the past few quarters, but as the prospects for lower rates begin to materialize, and we can start to see the line of sight for maybe a 6% mortgage rate, is it possible that the pace of deferrals begins to ramp higher over the next couple of quarters? And if that's the case, what parts of your business do you think could be most exposed?
Well, it's, intuitively, it's probably the converse of what we've seen. You think about the categories, and Billy, please chime in, but those things that are components of a large project, kitchen, bath, flooring, lighting, are all under pressure, and our customers tell us it's because that large project is being deferred. We're certainly not going to try to call timing, but just to echo what Ted said, there is certainly a direct relationship between decreases in mortgage rates and the amount of activity that you at least see picking up in turnover. And so I think the important point here is, as we've said for years, the long-term fundamentals of home improvement demand are strong. We have continued to invest through this period of moderation. 2024 marks the highest amount of CapEx that we've invested back in the business, really, in the last 15 years, because we are bullish on the future. And timing is uncertain, but we're going to be ready for it.
Great. Thank you.
Our next question comes from the line of Brian Nagel with Oppenheimer. Please proceed with your question.
Hi, good morning. Thanks for taking my questions. So my first question, just with respect to the pace of comps. So there was the numbers you gave in your prepared comments. There was a marked slowdown from June to July. Is there anything that notable there, or is it just that growing malaise we talked about?
Yeah, Brian, thanks for the question. And, to reiterate, in our comps were -3.7, -0.9, and then a -4.9. While we did see some softness in July, as we alluded to in Ted's comments, there's no question that the extreme heat took some sales in weather-related categories. Think ACs and fans, think air circulation, think watering. Those typically come for us in the July timeframe, and we saw, as I think everyone on the call is aware, we saw a pull forward of that significantly back into June. So it was really just a shift as we saw, some of those categories move into the back half of June, and I'll let Richard expand a little bit further.
Yeah, and Brian, Billy's comments were spot on. There were signs of maybe a little more general weakness. The major driver were those heat-related categories. There were some signs of more general weakness. That had an influence on our guidance range. But let's talk about that range and kind of how we've started off the quarter. August has started off at a level consistent with what we would expect in a -3 comp result for the year. And August comps are better than July, right? And so there are a lot of factors that went into our guidance, but again, August has started off at a level consistent with what we'd expect in the -3 comp case.
That's very helpful. I appreciate all that. And the second question I have, I guess, the bigger picture, but we were talking a lot about SRS. The acquisition now is closed. You're working on the integration. Because we're watching Home Depot, this continued push into the professional market. I mean, should we be expecting you to be on exploring other acquisition opportunities here?
Well, Brian, as I said, SRS will continue their activity to fill in geographies in segments, et cetera. Look, we just made a very large acquisition that we feel great about in early days of joint business planning and value creation. We've always talked about utilizing M&A for growth opportunities, whether it's segments or geographies or customer bases, and expect us to continue to do that, but do not expect us to do anything, large, having just done this very significant transaction with SRS.
Thanks, Ted. Thank you very much.
Thank you.
Our next question comes from the line of Zach Fadem with Wells Fargo. Please proceed with your question.
Hey, good morning. It sounds like the pro spread widened versus DIY relative to Q1. Curious if there's any call out there. And then you mentioned positive comps for pros engaging in your new ecosystem. I'm curious what % of pros this now represents and how you'd expect this trajectory to trend now that SRS is under your belt.
Yeah, hi Zach, it's Anne Marie, and pros certainly outperformed do-it-yourselfers in the quarter. And as we have mentioned, we continue to invest in the pro ecosystem to accelerate growth and really drive and grow the share of wallet. I'll throw it over to Chip, and he'll speak a little bit about the investments and what we're seeing there.
Yeah, thanks, Zach. As we've mentioned in the past, we're investing in markets. And last year we had 14 markets we invested in. We'll be fully invested in 17 markets this year. And when we talk about investing in markets, it's a distribution supply chain capability play, foundational capabilities that help us better serve the pro, and then most importantly, our expansion of our outside sales team. We've seen positive growth in all of those markets since we've been investing, and we see that quarter after quarter. So we're very, very pleased with our progress over the last year and a half as we've marched, and we continue to march into 25 with the same progress and expectation of expansion.
Gotcha. And then, Richard, two quick ones. First on buybacks and how we should think about the timeline around the return. And then second, on the long-term structural margins. You gave some good detail around the impact of SRS. Curious how we should think about the new high watermark in recovery over time.
Well, let's talk about share repurchases. So as we had announced, as part of the SRS acquisition, we financed the acquisition with $10 billion in bond issuances and then some short-term commercial paper raising. We are currently at a 2.6 times debt to EBITDA ratio. We like to see that ratio around 2.0 times. It's our intent to delever over time before we restart repurchases. That's going to take us likely into the year 2026, and we will obviously update our investors on how that looks over time. But that would be the kind of the current calculation. Sometime in 2026 we would return. And then from a long-term structural perspective, when we laid out our base and an accelerated case, we said in the base case, look, we anticipate in the base case that we will always generate some degree of operating leverage, and that will always remain true. We're not going to talk about a high watermark, and we will continue to update you on our views. But for now, we're executing with exceptional expense management, exceptional management in cost of goods sold, and we're over-delivering really on the profitability we would have expected at this top line rate. So we are happy that we're running the business as it should be run, and we believe in those base case and accelerated cases that we laid out in June.
Got it. Thanks for the time.
Christine, we have time for one more question.
Thank you. Our final question comes from the line of Steven Forbes with Guggenheim. Please proceed with your question.
Thanks, everyone. Good morning. Maybe just a quick follow-up on SRS. Ted, you mentioned the growth, right, and broke it down 50-50 between comp, and I think you said lapping acquisition. So maybe just give us an update on where the branch count is today. And then how would you sort of summarize the capital spending needs of that business to fund both greenfield and acquisition-related expansion as it included in the CapEx guidance? Thank you.
Sure. The good news is on their greenfield operations, it's reasonably capital light. You know, they lease a more modest-sized facility than a Home Depot DC would be. Think of this as a branch operation, and you know, high turning inventory, and you know, variable pay for the sales force. So they tend to be break even in year one of operation. Similarly, when they make infill acquisitions, they have a great process to get that acquisition up on their ERP system. They literally do it over the weekend. They acquire a company on a Friday, and when that company opens up on a Monday, they are on the core ERP system of SRS. And that lets them get the operating process in technology synergies very quickly. And they have a track record of doubling EBITDA of acquired companies in the first 3 years of ownership. So it's reasonably asset light. It's quickly profitable on a greenfield basis, and it's multiples of earnings expansion on an acquired company. Since we've owned them, they've made, in fact, I think last Friday they closed on a small pool deal. They have a couple more under LOI. So these are modest infill acquisitions that they do in the normal course of business. So we're really excited to watch them grow. And again, it's reasonably asset light on greenfield, and the multiples they're paying, as you can imagine, on smaller regional companies, are generally in single digit EBITDA multiples. So nice earnings profile on their acquisition case.
And Richard, maybe just a very quick follow-up as we think about sort of restating last year's numbers for intangible amortization. The full year amount for last year, we're looking at 15 basis points as a percentage of sales, or maybe correct me if I'm off there.
Yeah, the total amortization expense last year was $186 million for Home Depot for the full year of 2023.
Thank you.
And Steve, on branches, they're at about 775. So when we announced in March it was 760, you can see their growth profile. They've opened 20 plus branches just in the last few months. So these folks are super growth oriented.
Great to hear. Thank you.
Thank you.
Thank you. Ms. Jancy, I will now turn the floor back over to you for closing comments.
Thank you, Christine, and thank you, everybody, for joining us today. We look forward to speaking with you on our third quarter earnings call in November.
There we go. Home Depot earnings. This will be available as its own upgraded audio for better experience very shortly. What we're going to do now is we're going to end this video out. So we've got 2 premieres waiting to go. If you could tap the like button, subscribe, it helps support this channel. Thank you very much indeed. Let me just read some of the comments. Team Fusion just came in. Not sure who commented last night that J&J was going to go up today. That's a joke. I'm down 200 today. Not sure who commented last night that J&J was going to go up today. That's a joke. I'm down 200 today. Let's have a look. J&J 1.79. Well, what you got here today, quite simply, is people taking profit to buy growth. We know that the economy is going to go up. Just hold, stay where you are. As you can see, my portfolio is once again exploding again. We're up 1.56 over two grand including the Roth and the main channel. What we've got this morning is CPI data coming in lower. Which is great. Interest rates are going to come down, which is great. Inflation is cooling all the time, which is great. People are taking profit out of J&J. That's perfectly healthy. And you're going to see all the stocks rally again. You can see we're green all across the board, 102, 384, all-time highs. That's what's happening today. I said yesterday that the market would be explosive today, either massively up or massively down. Well, and I was obviously very pro up because that's why I'm all in a margin, and it is massively up. What's happening now is perfectly normal, taking profits from J&J. It's a defensive stock. We don't need defensive now. We need growth. However, that doesn't mean to say you sell your defensive positions. That's why I own the S&P always. Can I show NVIDIA? Yes, I've got just 7 minutes to go before the premiere starts. NVIDIA is piling up today. Now, Matt, earlier on, I think his name is Matt, I said to him to set a stop trail order. I hope he did that. And I also hope that he's allowed enough gap for movement. You've got to look at the swings and make sure that you hold enough of a swing. If you are using a stop trail loss to get out of this stock today and take profit, that's fine. But you have to make sure that you allow for these sort of movements. Otherwise, you'll be out really quickly. Doesn't matter. He bought at 109. He's making money anyway. But even so, you just got to be really, really careful. Frederick, Martin, I see you're around 77,000. Is that the S&P 500? And how much did you invest from the start? Okay, I am 100% invested in the S&P. The S&P only. 77,000 is my cash. I started with $5,000 3 years ago. I had no income for the first year and a half. I've only been earning money on YouTube now for a year and a half. So that's exactly what I've done. I'm worth 77,000 now in my brokerage account. I am worth 25,000 in my Roth IRA. All of it is in the S&P. Both accounts is the S&P. That's it, which is VU. I'm now worth 102,293. I am using margin. You can see my margin position there, 81471, which tells you I actually have $180,000 invested. Now, that's my full allocation, full balance. If you look over here on the brokerage account, it doesn't show the margin that you use. It only shows the profits and the loss. And you can prove that because if I share with you the S&P, if you look at the S&P is up 0.74 today. That's all. It's up 0.75%, but I am up, as you can see, 1.53, double because I'm in margin. Double. But it's double up and it double down. So just remember that. Okay. If you look at my buying power, you will see that margin total. I've got 125,000 available. I've used 81. So you can see my risk. My risk tolerance is very, very low. 48.5. I'm now paying it back. It'll be back over 50% when I get paid on the 21st of the month. My interest rate, you can see there, is 6.55. You can see there really isn't any risk here at all. Right. Okay. Well, there's always risk, of course, but it's managed in a way that I am extremely confident with. All right. Okay. Does that answer all your questions? Frederick, 5,000. Awesome result by Martin. Awesome result. Yeah, thank you very much indeed. All you got to do is just hold the S&P. It's not rocket science. What is perhaps rocket science, if you want to call that, the only decision you make is when to add more, when to buy margin. That's all. And the other thing you do, of course, is discipline. Many of you are in, out 1 minute, next minute you're out. I mean, Matt says he wants to trade today and take a profit. I wouldn't sell NVIDIA. I'll take NVIDIA to $200. But, the most important thing, if you want to call it rocket science, if you're in the hardest part, is just understanding what you own and not being stressed. I just bought the S&P 500 today. I'm following you, Frederick. Don't follow me. If you follow me, you don't understand what you're doing. You're just following me. I always try to encourage people not to follow me, but to understand why I'm doing what I'm doing and make your own decisions. Remember, I bought the S&P 8 months ago, so that's a very different subject. Also, I bought massively on margin when we had that crash, when Meet Kevin said the market's going down 60% and Donald Trump said that America would cease to exist within 48 hours. And then we had the carry trade. That's when I went all in. Didn't go in now. I'm not buying anything else probably ever again, because I only need to get to $1 million. That's my aim on this show live in front of you. Make this portfolio $1 million. That's it. That's it. $5,000 what I started with. Get to $1 million live on the show. I'm not going to be buying up now. I'm just going to be paying margin down. I'm not going to be buying up at all. What's the point of that? I went all in when it was down. Now I'm in. All I do is pay back margin. That's it. I will get to $1 million. I've got everything here I need to get to $1 million. Right. Now, guys, what we're going to do is I'm going to end the show, send you to a premiere. We do have videos, 2 premieres coming out. Hopefully you'll all join me for the live conversation. Let me customize this video, this live show now, and send you to the first premiere, which goes live in 1 minute. There you go. I've done that now. Excellent stuff. This is the premiere. We've got 2 premieres. The question I'm asking you, please join me live. It's live chat. You can keep the conversation going. Is Rumble honest and fair? YouTube, you can grow by just providing great content that people want, and you grow. On Rumble, we've just found out there are people being sponsored and paid. YouTube don't do that. Apparently, Matt Kors earns 40 grand a month. I can't believe that, but that's apparently what's said. But people are being paid, so it influences the platform. People say they want free speech, open and honesty. That's why Rumble was created. But in fact, if you're promoting people that you like, we've got Russell Brand, we've got Donald Trump, gets put on this a lot. I mean, are they all receiving money to stream to it? YouTube, I don't get paid, sponsored. No one on YouTube, even Mr. Beast doesn't get sponsored. You just earn your money by providing content that people want to watch. Is Rumble really fair and honest? Is it a scam? What do you think? I'm on it live 12 hours a day. I reported the earnings last night. It's a premiere is about to start. At the end of this special video premiere, and you can chat in the live chat, it'll go directly to a Robinhood breaking news as well. And then from there, it'll take you to the closing bell this afternoon when I'm back. And then we have earnings right after that with ACHV. If anybody else wants another earnings tonight, you have the next couple of hours to either super chat a video or a super thanks a video, $5 members only, and you can book in an earnings for tonight. I can do 2 at once, remember. Can you share how much you make from YouTube? Yes, I can tell you how much I make, and I often do. At the moment, it's about $2 grand a month, that's it. If you want to go on to certain websites like Social Blade, you can see as it grows. It's not completely accurate. It's about a 10%, maybe too much or too little sometimes, but it's a rough guide. You can see for yourself what I earn and what I'm doing, and I share it all on screen here with you. All right? Okay. So that's it. The show's about to end. Thank you ever so much on Rumble. Click the profile here, come into YouTube, and you'll find my live feed. I've got a premiere going right now. See you back this afternoon. Bye-bye for now. That's that ended. Okay, premiere is about to start. Let me send everyone now to the premiere. Please do join me. Live chat, live conversation. This premiere will take you right to the next premiere. This is a 10-minute video, followed by another 10-minute video, and then you'll go through to the... closing bell this afternoon. That's it from me. Thank you very much indeed. Join me now on the premiere and answer the questions. Let me know what you think. Leave comments below. I will see you back for the closing bell. Until then, as always, take care of yourselves and each other. 222. Two, two, two. Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Well, what a day today has been. Is it any surprise? No. The markets are not crashing 60%. We bought the bottom. We announced we bought the bottom. We used margin. This is fantastic. And now we're making money hand over fist. $3,000 today. Absolutely awesome. And of course, we're talking about NVIDIA today as well. So welcome in. Now we have 2 earnings tonight coming up. On the main channel, we have ACHV, Achieve Life Sciences. And on the extra channel, we have MRCY. We have 2 earnings. Okay, and we're going to be discussing, of course, NVIDIA today. So that's coming up in a minute. So also, I have a new service here of more earnings that I'm able to provide you with and more information about the options that you can choose. Okay, I can pick one or you can choose. All right, if you are a member of the channel, you can pick an earnings and you can do that, or I will pick it for you. All right, so I'm going to give you a few options right now for tomorrow. We can have 2 in the morning and we can have 2 in the evening. So I'll wait for everyone to get here, and then we're going to do an NVIDIA special. Plus we have this new service that I've now got a way to know exactly what's happening with earnings and to give you all the earnings information. So tonight we are doing Achieve Life Sciences and Mercury. We're doing Mercury Systems on the extra channel. So we're doing double earnings tonight, and we will be doing double earnings tomorrow as well. So let's line it up now. So this will be August the 14th. We will do a Virgin Galactic, not Virgin Galactic, I beg your pardon. We'll do an NVIDIA special in a moment coming up. So I think everyone's here. So I'm going to give you now, we've got a good number of members in now. Come into the chat, let me know you're here. I'm going to give you some earnings for tomorrow morning. If you want to pick one, it's a member's perk with a $5 super chat. If not, I will be picking 2 for the morning, but you can choose. So I think we got a good number of people here, so I'm going to give you the choices. So tomorrow morning, Wednesday, the 14th, we have UBS. I'll give you the names for these so you can see what they are. And you can choose, or I'll choose for you. Okay, so we've got UBS. This is option number 1. Okay, let me share with you on the screen. UBS Group AG is a company which engages in provision of financial management solutions. UBS, let me check if this one is available. Pre-market or August 14th. I don't think that's a best choice. So let's go to the next one. CAH. So if you want this, you just got to shout it out, do a $5 super chat, and it's yours. Preview earnings call. Let me see what time this is on tomorrow morning. And this one is, we can have this one tomorrow, August 14th, tomorrow morning. This is 7:30, so 7 o'clock. Appeal, here we go. My live does not contain, this is ridiculous. Submit. TikTok is getting completely and utterly ridiculous all the time. So I am picking the first one. So this is 8:30, 7:30. So 7 o'clock tomorrow morning, I have picked the first one. It is Cardinal Health. Here we go. So here's the first one. You can choose tomorrow GLBE, ICL, SPHR, PSHQ, ONDS, PRPH, CREX, SDIG, ZPTA, EVAX, CRKN, POAI, EDBL. That's the choices you can have. I will pick one myself if you don't pick it. So Cardinal Health. So this is CAH. We'll do this on the main channel. This is at 7 a.m. Pre-market. There you go. So going to give you one more now. You can choose for a $5 super chat, or I shall choose it. I'll give you the options right now, and then we're going to do a NVIDIA special coming up. So GLBE, you can have this one, GLBE, Global E Online. Let's have a look. Global E Online pre-market. This will be August 7 a.m. So that'll be 6:45. So you can have that one if you want it. Or I'm going to give you another choice. ICL. If you'd like ICL. Okay, I'll show you what that is. ICL Group. Okay, what time is this one? August 14th, pre-market. A Zoom. That'll be 7 a.m. Okay, no one has chose one, so I'm going to choose them for tomorrow. Here we go. You have a choice. There are about 10 to choose from, and I'm picking them unless we get super chats. So we're going to do ICL, and this will be at 7 o'clock as well. So 2 happening at the same time. So this is at 7 o'clock tomorrow, ICL. There we go. That's what we're doing tomorrow morning. I'm trying to provide you with more earnings, more information of new emerging stocks that we can do. There we go. So there's your choices. So it's another new service I'm now going to provide. 4 earnings a day, 2 in the morning, 2 in the evening, plus opening, closing bell, lives, videos, and shorts throughout the day, plus the 12-hour stream on the extra. Trying to provide more and more services to my members. You can choose. So for now, we're about to do an NVIDIA special. For tomorrow evening, you have until tomorrow morning to choose. So after hours tomorrow, there is Cisco. There is BRFS, which is Brazil Foods. There is Stein, which is Stone Company. We covered that before. Stone Company. D-Local Limited. We've got Fidelis Insurance. You can have Fidelis Insurance. Zomedica, ZOM. Recor Systems. GWH, which is ESS Tech. MGFRM, Monogram Technologies. CSLR, which is Complete Solaria. BYKY, BioKey International. TIVC, which is Tivic Health Systems. or cyclical pharmaceuticals, okay? They're the choices that you have. I've got a new system, a new service here for the members. You can choose. If you don't choose, I will pick two myself, but I will be picking these later. So before we do our NVIDIA, I've got an NVIDIA special I want to do this afternoon. We are booming, of course. NVIDIA is exploding. This is exactly as planned, all the way to $200. My portfolio is dramatically up, as you can see. We're not at all-time highs yet, but we're getting pretty close. We're 103,645. Remember, the all-time high is 107, but we've got a lot more shares now. A lot more shares, so we're making money a lot faster with margin. We're up. The S&P is up 1.5% today. I'm up over 3%. As you can see, I'm doubling it. But there's big warnings for NVIDIA, and I'll put that out in a few moments. All right. But first of all, I want to do the comments, and then I want to make the videos for the morning. Hi, Kate. Hi, Stacey Bailey. Caden Youngquist is here on Twitch. How are you, mate? Lucas Aid Family, James 007, Beer O'Clock, Evening All, Team Fusion, James 007, yes. Hi, James, how you doing? Asti Reverse Stocks announced, price has plummeted. No surprise there. Oh dear. They've reversed again. We're 4 cents now. That's not good. That's not good at all. Asti now, the entire market cap is... this is not good. It's 8 million. Let me refresh that. That might be less. Let's have a quick look. The entire market cap, 4 million. Oh dear. Ascent Solar has no value at all. $4 million. $4 million. Absolutely nothing at all. Right. I think NVIDIA is going to see a serious upward move on earnings. Yes, we'll be covering it in a moment. Excellent choice, Andrew. Hi, hit the like button. I love NVIDIA. Thanks to Martin. Well, not thanks to me. I don't control it. HRT Queen. Good evening, Andrew. Hit the like button. I love NVIDIA. Corey, I love NVIDIA too. I have a lot of it. Good evening, everybody. Hi, can NVIDIA be held through CPI? Exactly. That's what I'm going to come on to in a minute. Just before I do the NVIDIA news in just a moment, we're going to just prepare. We've got two earnings tonight, 2 in the morning. If you've just tuned in, a new service I'm now providing for my members. Every day, I'm going to give you all of these options for earnings that you can request. I will be providing 2 earnings every morning and 2 earnings every night. It's a new service that I want to give even more, provide the best service on YouTube TV, plus all the opening, closing, shorts, news, lives, everything else. Okay, so just very quickly, for tomorrow morning, tomorrow after hours, you can choose 2 of these. It's a members perk and a $5 super chat, or I will pick the 2 that I want to do. Cisco, BRFS, Stone, DLO, FIHL, Zomedica, REKR, Record, GWH, MGRM, Complete Solaria, BKYE, Tivik, TIVC, or Cyclacel, CYCC. You've got until the end of this show to decide, or I'll be picking in the morning. All right, but right now, just before we do our NVIDIA special information, we've got to do the ones for the morning. So we're going to do CAH tonight. We've got ACHV and Mercury. Mercury will be on the extra channel. This is all about providing more and more services for my members. A lot of these will be members-only videos, members-only live streams, and all the rest of it. But first of all, Cardinal Health, CAH. So this is pre-market. Cardinal Health, ticker symbol CAH. Join us in the morning, August the 14th, pre-market. It's a new service I'm providing of 4 earnings a day, plus all the other opening and closing bell shows. If you are a member, if you do a $5 super chat, you can choose which ones we do. 4 a day we're doing now. Increased services for all the members. Many of these will be members only live streams and all sorts. So, Cardinal Health in the morning, August the 14th, pre-market. It will be at 7 a.m. Join us if you are into Cardinal Health, and you'll learn all about the stock. It's a way of me to bring you new businesses, new companies to be able to invest and make money on. So, click above my head for all the links down below in the description. I shall put the event here and over on this, and this will be on the main channel, and down here on the extra channel, because we run 2 channels at the same time, will be ICL, and I'll give you information on that on another video. ICL down there. But join us in the morning on the main show for Cardinal Health. Until then, as always, take care of yourselves and each other. Okay, Cardinal Health. And then we're going to do ICL. These are the promos to go on the main channel, ICL Group. Here we go. ICL Group, ticker symbol ICL, providing the earnings for you tomorrow morning, August the 14th, pre-market, 7 a.m. on the extra channel. It's a new service I'm providing now, 4 earnings a day, 2 in the morning, 2 after hours. My members can choose from my update list every day. You can choose, I'll remember which ones you want with a $5 super chat, or I will choose for you. The choice is up to you. You can have your favorite stocks featured if you want on the channel. So in the morning on the extra channel, we have ICL Group. Click above my head for all the links down below in the description. I shall post ICL over there, and down here I shall post what we're doing here on the main channel. And on the main channel we are doing CAH on the main channel. 2 earnings at the same time in the morning, 2 in the evening. Join us as we provide more and more services to our members. We're here to be the best live channel in the world. Until next time, as always, take care of yourselves and each other. All right, that's that. Now NVIDIA, NVDA, and that's not how you spell NVIDIA, is it? NVDA. Okay, let's have a look at this. Welcome everybody on TikTok. Let me come back to the main show. Let's have a quick check of where we are. I've answered all the questions. That's good. We've got a friend request from, I can't accept any friend requests from people that are not members. So, MX Trader, if you are a member of the channel, a member of the channel, I can accept your friend request. But if you're not a member of YouTube, then I cannot accept friend requests for people I don't know. Let me just message you back if this is you, or you've already messaged me back. Okay, so I've already replied to that, so I don't need to do it again. You're not a member. Let me just double check that you're not a member. Let me just do that now. There we go. Let me search before I delete it. I don't do any friend requests from anyone that is not a YouTube member. And no, you're not a YouTube member. So unfortunately, I have to decline that. Unfortunately, I've sent a message. I send people messages explaining, and then they just message me anyway, thinking I'll change my mind. Especially a lot of scammers and bots and ladies who aren't really ladies. They think I'm going to accept it anyway. Well, I'm not. Don't accept any. We're not here to grow the biggest platform. We're here to grow the best platform. So let's go now and do NVIDIA before we ring the bell and talk about scammers and bots tomorrow morning. Where we're going tomorrow morning. Now then, this is important. Okay. Now then. NVIDIA How many people are here? 126. So I'm going to bring you do an NVIDIA special now. So if you could tap the like button and click subscribe. Let's get 100 likes, then I'll do the video. All right, for NVIDIA. Okay, here we go. Let's do it right now. Let's bring up the funky music. Here we go. 127 watching live. 135. Let's see if we can get 100 likes, and then I'll do the video on NVIDIA. The video on NVIDIA. I like it. 133. You ready? We got 4 likes. 5, 4, 3, 2, 1. Boom. Let's do it. Let's get NVIDIA out. 38 likes. Okay, you ready? We'll do that again. There should be at least, we'll do it. I think we can get to 70. 70, and then we'll do the NVIDIA news. 5, 4, 3, 2, 1. Here we go. 47. We've got to get at least 50. Come on, guys. It's a big day for NVIDIA. Big day for all our stocks. 47 likes. Ready? 5, 4, 3, 2, 1. Let's see what we can do. And we're up to 56. Fantastic. I think we could do more than that, but that's enough. I'm very happy with that. Okay. Let me get out of there. So, NVIDIA. Here we go. Right. Let me bring up NVIDIA over here. NVDA. And we need to reflect it with the overall market as well. That's the point of this. So here we go. Breaking news here on Martyn Lucas Investor. NVIDIA, ticker symbol NVDA. It is breaking news today because it's a move that has shocked the market. I've been speaking to some very well-connected people today in Wall Street through my X and Instagram, on Bloomberg and my CNBC contacts and my CEO contacts. And people have been shocked today and surprised today at the rotation back. Why? I've no idea. Let me explain what exactly happened. And if you've not been watching all our NVIDIA videos, I like saying that, NVIDIA videos, you'll be a bit behind the curve, a little bit like the Fed are. Let me start with this story. 18 months ago, I said in the summer of 2024, we would get rate cuts. And about 2 months ago, I said we'd get rate cuts of 0.5%. I've never changed. I'm not going to change. Basically, it's all about the numbers. Unfortunately, in the game of the stock market, manipulation and people making up stories and overreacting is guaranteed. And that can dictate the stock movement. Does not dictate the companies. The company's performance is down to the workers, the people, the innovation, the CEO, and that's it. The stock price just gets ahead of itself or catches up or gets overreacts or whatever. What we've got now is been inevitable. It's not a surprise to me, and I'm going to prove to you with my own money that it's not a surprise because I've gone all in with margin. Not today, already. I already knew this was going to happen. So let's explain exactly what's going on today. A week or so ago now, pretty much to the day, we had a huge crash around the world to do with the carry trade. We've explained what the carry trade is. Essentially, people had borrowed money on the cheap yen and used margin, got over leveraged, and then they all got liquidated and they bought US stocks. The whole thing came crashing down. Was that because the businesses were rubbish or people are greedy and they borrowed cheap money? Yeah, it was because people borrowed cheap money and they got over leveraged and the whole thing fell apart. That's what happens. That's macro conditions, not the business. That's why I went all in. And I will demonstrate that I'm all in. I have no cash left. I've got nothing in the bank. I am 100% in. I'm living on my Robinhood account. And there is my margin, $81,471. $81,000 of margin. I bought my first house for $40,000. So considering I started with $5,000 3 years ago, $81,000 margin, I think that's about as bullish as you can get. However, it's still very measured and I'm very happy with that. I have looked at the balance sheet, the numbers, and I believe that NVIDIA is going to $200 a share. That's what I believe based upon the sales of what I'm hearing, what I'm talking to people about. That's where we believe it's going. So what happened? Everything dumped off. All quality stocks got dumped. And that is the bottom line story here. People dump the quality stocks. Apparently 1 minute they love all these stocks, Nvidia and Amazon and Apple. But next minute, it's a load of rubbish. It all got too expensive. We all dumped it. This is what I say over and over again on the show. Wall Street are traders, manipulators, and scammers half the time, not investors. I am an investor. I own businesses that work for me. So they all dumped them. And then what did they do? They bought the Russell, a load of rubbishy stocks at the bottom of the pile, and the Russell popped up. And now people have decided, hang on a minute, let's get out of that. We made some money on the Russell. Where are we going to put our money? Let's buy quality again. As I've always said, quality, the cream always rises to the top. People are buying back. Now, I've been speaking to some people today on Instagram, and I've already made this announcement about 2 months ago. There are billions of dollars on the sidelines waiting to come in. But you have to remember, people with billions of dollars, millions of dollars, very wealthy people, don't risk their money. They don't need to. They can earn a lot of money just by parking their money and earning high interest. I mean, flipping heck, even on Robinhood, you can earn 5.25% with doing nothing. So if you've got millions or billions of dollars of money, why would you even risk it? There's no point. Whereas you and I were trying to build a portfolio to millions and billions, maybe. So we have to take risk. So they've been parking their money and now they're starting to pile in. It hasn't even begun yet. The full AI gold rush hasn't even started. It's about to begin. This is just the beginning. Because what we've got now is, as I have said, and today proved it, but here comes a warning, so don't switch off just yet. There's a big warning right now. It's not all a gold rush and we're all going to win. We're all going to get rich. It never works that way, of course, ever. This morning, as expected, no surprise, we got PPI. PPI this morning came in lower than expected. The consensus was 0.2, 0.1. What happened there? What have I been saying for 18 months? As I've traveled around the world, I've got to meet people and understand how societies work. In the Fed in the United States use a data-dependent information, which is backward-looking, out of date. I don't know why they do it, but they do, and they're behind the curve. However, unlike other countries, the United States is able to withstand a little bit late and behind the curve. No surprise today that PPI came down lower than anticipated and the market have gone, oh my God, the US economy is stronger than we thought. Up it goes. I want to buy quality. I want to get back in, and they're buying the Mag 7. They're buying Nvidia. They're buying the quality stocks. I'm not doing that. I'm buying the S&P because the S&P's got everything else in it that hasn't moved very much. Okay. Now we know all of this because we've been following the economy for 3 years. We've been reading balance sheets. We're covering every earnings possible. I'm now covering 4 earnings a day. I mean, who else does 4 earnings live a day plus 12-hour streaming? I don't know if anybody else is that mental enough to do it, but that's what I do. So I've picked up a thing or two, right? I've got a few CEOs of friends. I've got a few managers in Wall Street and hedge funds and people that work at these places telling me stuff, which I share on X and Instagram. So anyway, that's what's going on right now. Now then, here's the warning. Here's the warning. No surprise, everything is great. But let's remember one little thing, shall we? As we mentioned at the beginning of this video, greed and profit taking is always a concern because Wall Street and all the analysts on Bloomberg and CNBC who say, oh, we should buy Apple. I love Apple until I don't. All right. Okay. Are going to get very greedy in about 5 minutes. They're going to start taking some profit. And the reason for that is one, they don't really believe in what they own. They're just greedy and they just want to take profit wherever they can. I don't do that. I hold and I want to sell in 10 years and I want to sell a great business to somebody else who now owns a great business. There's something nice and comforting about that. Anyway, that's just me. The issue is tomorrow morning we have core inflation. We have CPI tomorrow. Now, if you've been with me for the last 3 years, you will know that these numbers don't often go together. They should, but they don't, and then people will manipulate them and use them. Now, we have seen PPI come in favorable and everything goes up. Then the following morning we get CPA and boom, it goes back down again. So be very, very careful. Now, some of you, one of my members today said he's following me and he loves watching my portfolio keep breaking all-time highs. And we started with $5,000 and now I'm at 100 and just about 104. I've never shorted a stock. I've never done options. I'm following you. I've gone all in like you have. Hang on a minute. He's gone all in with margin on NVIDIA. Now, I love NVIDIA. It's a big part of the S&P. It's about 6.7%. However, I also like a lot of the other businesses as well. So I'm all in on margin, 80 grand plus, on the S&P. I'm not all in on NVIDIA alone. I would never go all in on any stock with margin or without margin. Definitely not with margin. Because here's what's going to happen. I've been spot on with my predictions for the last, when it comes to the rates, the last 18 months. But and I've been spot on with my predictions for the S&P and the general economy for the last 8 months. Before then, not so much. I made a lot of mistakes when I first started. I traded a lot, made a lot of mistakes. Now I'm just an investor and I just buy the macro dips and hold. But this is my prediction. This is what I think could happen. If you are a trader and you don't really believe in NVIDIA or don't really believe in anything, you just want to take money. There's nothing wrong with that. No one ever lost making money. Please feel free to sell your NVIDIA now. You've made a good chunk of money today. What I suggest you do, however, and remember you've only got 27 minutes left to do this, is use a stop trail order. We could get a bit more of a rise into the close. A stop trail order only works during the main opening hours. It doesn't work after hours. A stop trail order will move up. Now, what you need to do is rather than a stop loss, rather than just saying at 109 I'm out or 110 I'm out, because the trajectory of this stock is upward, bullish, and it's in my opinion going to $200. If you set a stop trail order, it'll trail up. But what you do need to do, because you can trigger a stop trail order in seconds and go, well, that wasn't much fun, it didn't go up anymore, is you need to look at the swings that we've got here and see, okay, it's moving, let's say it's moving 1%, 2%. Don't get greedy, put in 3%. That way, if it moves 3%, you'll sell, because that's one of the bigger moves of the day. Or if it goes up, it will just keep dragging that price up with it, but it will have to be executed before the closing bell, which is in 25 minutes. After that, it won't work. It'll just stop, okay? It cancels. You've got to do it during the opening hours. Now, that would be a good idea if you are a trader and you don't care about the stock, you don't see it going up to $200, trade it. However, if you bought it this morning on your main account, you're going to pay 20% tax. At the end of the year, your brokerage will contact the IRS or Inland Revenue in the UK, and you will end up, they'll declare your profit, and you'll lose 20% of that money. However, if you'd waited a year, you pay a lot less. And also, remember, if you believe it's going up to $200, you've left a lot on the table. And then it'll have a dividend put to it, and it'll be just a stock like Apple. You'll own it for life. All right? In my opinion, that's just up to you. So just bear that in mind. Or you could just hold it. And the reason why I'm suggesting a stop trade order, if you own the stock individually and if you are on margin, is because tomorrow we could wake up with volatility. Because tomorrow there's going to be CPI. We had PPI today. Tomorrow we've got CPI and more data. Now, I'm very confident, very, very confident it's going to be great. And the stock will go up. And I'm not bothered. Hence why I'm all in margin and I'm not selling anything. However, overnight or early in the morning. Remember, you can access these stocks 24 hours a day on certain brokerages like on Robinhood. There will be people who dump and take profit, who drive it down to buy it again. Very often people say, why did the stock go down when it's all bullish? Well, for the very reason, it doesn't necessarily have to be bad news to drive a stock down. Good news can also drive it down. If we've had a recent rally from nothing, and bearing in mind a week ago we were down so much and here we are today up so much, there's a huge amount of money on the table for the traders in Wall Street. So they'll dump it knowing they can drive it down, knowing then retail will get fearful and dump because a lot of people are using margin now. Margin is about to get a lot cheaper. A lot of people are using margin, like our friend we mentioned earlier, gone all in, doubled up, using all the margin possible. A lot of people will get margin called on a stock where they're just making money. But people get greedy, they get over leveraged, and they'll lose money. So retail will be forced to sell. Wall Street will drive it down, and then they'll buy it up after PPI, and it will go up again. So you could just be an investor like me and ride that out, knowing it's likely to drop in the morning or after hours, maybe 3%, maybe 4%, but then go higher. Remember, if your stocks go down and you don't sell, you've never lost any money. Now I'm in with 180,000. I expect to be at $1 million in less than 6 years now with the growth that I've got. Now I've got 180,000 invested because of my 78 in my main account, my 25 in my Roth, and then adding into my margin, which is 81. I've got about 180 grand. That means my portfolio has huge swings. I can go up and down 10 grand in a day. That doesn't mean to say I've lost 10 grand. It just means the stocks have moved that much. And if the market goes up, if we look now at VU today, which is what I am in 100%, the S&P, it's up 1.48. That's all, but I'm up 3.06. That's because I'm in with margin. I could be up double that. I could be up 6% today if I'd gone even more margin, but that's not appropriate because I only want to achieve $1 million and there's no need for me to stretch it. I want to be able to relax and sleep at night. But anyway, this is NVIDIA. An NVIDIA special I wanted to make live. There's also some extra information as well. Talking to my contacts on X, CEOs, hedge fund managers, people at Wall Street, my friends who have lots and lots of money. I've played in Mark Cuban's house. I've done the Jerry Jones Halloween party. I know some successful people. And the belief is there's billions of dollars waiting on the sidelines, still waiting on the sidelines, waiting to come in. People don't gamble, they're waiting. I see that NVIDIA is going to $200. I see that the S&P is a 3x, and I said that before Tom Lee said it. I said it a long time ago, and that's why I am all in. So there's NVIDIA. The other thing I wanted to mention is the chips delay is not a concern. Those that are customers of NVIDIA, there are plenty of chips at the moment, and they're buying them, and they're not bothered. The earnings is going to be great for NVIDIA. We are going to cover it live, of course. It's going to be a major event on our channel. We do rank now number 1 and 2 in the world for NVIDIA, which is incredible. Used to be Meet Kevin and the big channels. Now it's me, which is incredible when you think we're only at 30, whatever it is, it's 30-something thousand subscribers now. But we are doing more work, going live more than anybody else, doing more earnings than everybody else. And I think what is most important, and let me just share this with you, what is most important is people are starting to realize, if I show you the homepage just for a moment, you will see there is the NVIDIA earnings, August the 28th, 3:10. I think the reason why we're ranking now for this stock and why we're ranking number 1 for many stocks, even though we're a very small channel compared to the big channels, people are starting to realize the people like Graham Stepan, the people like Meet Kevin, the big channel, the million subscriber channels, are there for their own benefit. They're starting to now realize, it's taken 3 years to realize, that I do not do this to sell videos. I'm the world piano man. I am toured with the world as the world piano man, named by Elton John. I've had my own West End show, my own Vegas show, and I'm here to help people, not to sell videos and think I'm a YouTube star. I've met my audience in person around the world. I know what it really means to meet the real audience, not just down the camera lens. So I want to be absolutely clear. There are people trying to sell doom and gloom. Only 2 days ago, Meet Kevin was saying that the stock market would drop 60%. World War III was going to start every day for the last 2 weeks. Not going to happen. And it gets him views. It makes him money and he buys another plane probably. I will never do that. I just tell you how it is. I share with you my real trades, my real money. I'm all in. I've got nothing in the bank other than $10 just to keep my account open. This is real. And I think now people are starting to wake up and realize, okay, something's different here. This is not a YouTuber. No, I'm not a YouTuber. I just used YouTube TV to broadcast. I'm an entertainer, I'm a person that cares about people, and I also know how to make money. It's easy to make money. The hard part is to keep it. That's the hard part. Making money is easy. If you work hard, and you work harder than anyone else, and I work harder than anyone else, and I will always work harder than anyone else, and I will never give up because I am here to serve my members. Anyway, that was a NVIDIA special. This will go out as its own video. Thank you very much for all of you that did tune into this. Click above my head, down below in the description. I'll put all the links. Here, I'll put the NVIDIA earnings. Be the first person to join me for the earnings. And down here, I'll put the NVIDIA playlist. Tomorrow morning, we'll be live, of course, with CPI or PPI, whatever's next. We'll cover it live. We'll trade it live. We'll invest it live. And we'll be also in the morning for 2 earnings in the morning, 2 earnings in the evening, as there are now going to be every day. It's a new service that I'm providing as of yesterday. All right, fantastic. That's it from me. Thank you very much indeed. Till next time, take care of yourselves and each other. Okay, now before we go, we've got another 15 minutes to go. Could we do something amazing? It's a Tuesday afternoon, normally a quiet show for us. We have 221 watching with 110 likes. Could we get another 20 likes, please? Let's see if we can do that. And while you're doing that, I want to see here on YouTube our analytics, how we're comparing now to Meet Kevin, who's just passed 2 million. We have a higher engagement rate. 98% of our live viewers are members. That's higher than Mr. Beast, any other channel in the world. Let's have a look at NVIDIA stock now, NVDA. I put a video about this last night. We were all over it last night. Yes, there we are on the home page. If you just put NVIDIA stock in to YouTube incognito, we're ranking on the homepage, and we're starting to claim that spot now. There you go. There's another one of my videos being suggested. It's great. Really good. It's good because I want people to know the truth, not just to sell videos to you so they can make more money for themselves. And it makes me sick. And I really get upset when I see people lose their money and get manipulated by people. I really, really hate it. I know you might think, well, why do I care? I do care. All right, I do. Okay. Right, let's have a look. 191. How many have we got? 110. Now then, just before we go, we're going to ring the bell in a minute. I also believe, 127. Bloody hell, that's good for a Tuesday afternoon. I also want to do something else. While you're all here, don't go away. I want you to do something else. I strongly believe if you take care of people, people take care of you. If you put good karma out in the world, good things always happen. I've always lived that way. I believe in it 100%. Always be positive, always work harder than anyone else, and always do the right thing. I believe in this. So what I want to do now is something special. For those of you who don't know, most of you probably do know by now, I was voted as the World Piano Man. This is my music channel. You can see I've done tributes here, all kinds of things when I was touring the world. There's my Vegas show. I've got Vegas showgirls and a big orchestra. I did a Vegas show, West End show, all sorts stuff here. I've raised money for charity all over the world. But there's always been expenses and taxes and fees and charges, and there's always been something going on. All right. Look, this is by the way, this is Mark Cuban's house. For those who don't know, here I am with a couple of models. A few months ago, in fact, a few years ago, I did Mark Cuban's house. This is his house. This is the Mark Cuban event, and these two models just jumped up and started singing with me and stuff. Anyway, I just thought I'd share that with you. Don't know why. I'm trying to raise millions of dollars for charity. For your charity, you can choose. So what I'm asking you to do is something very special, and I know my NVIDIA investors will do it and join in. Here we go. What I want you to do right now, live on the show, is go to my music channel. I'll give you the link right now. Go to my music channel, and I need to get 10,000 subscribers. The reason for this is I need to get to 10,000 subscribers so YouTube will turn on charitable giving. This is the count right now. We're at 6,083. And at 10,000, I can do concerts and events to raise money for charity where YouTube will not charge credit card fees, will not charge taxes, will not take commission out, and all my ad revenue, all of my ad revenue, all of my sponsorship, all of my super chats will go directly to the charity. On the show, it will say this show is connected with cancer research, Save the Children, or whatever. And I do it all for free. I get nothing out of it other than the pleasure of doing it. So what I want you to do is, NVIDIA investors, click on the music channel right now.
K287 donated €2.49 through a super chat. I buy NVIDIA €90, sell or hold now?
Sell or hold now? Well, let me just come back to your question in a moment. I have just recorded a video, which I strongly recommend you either rewind this live broadcast or see my video that will come out after earnings tonight. I've just recorded what I think people should do and what I'm doing. Either rewind this video or perhaps go and look at the video when it comes out. Right, here's the music channel. As you can see, we always get a scammer come in and try to scam it. Let me just do this a moment. You always get somebody who wants to ruin it. They always come in and unsubscribe just to make it look funny. There's always some idiot who does that. They want to take away from helping people. I don't know why, but there are always weird people in the world. Don't know why that is. Let me just do this now. I've just got to click on Martyn Lucas Investor. Just bear with me a second. Allow, continue. Yes. Allow. Continue Stream Deck. Yes. I've got to do this again. Every day we're having this issue at the moment. And let me do it again. YouTube. This time the extra channel. Yes. It used to save it. And now for some reason, since we had an upgrade on what do you call it, Google, I'm having this issue. Anyway, hopefully that's fixed it. Let me try it. Okay, here we go. All right. There you go. I've just put the music channel in. We're going up again now. I said it could rally into the close, and it's going again, ready for the PPI in the morning. Let me just get out of there so you can see what's going on. You can see my portfolio is going up now. Let me give you the music channel again. Sorry. There we go. Put it in the chat. I'll do it again. Right, there it is. Let's see if this has moved. Now then, if you do this, I've got an extra treat, right? There you go. It's gone back up again. Here's what I'm going to do. Not only am I able to raise millions of dollars for charity, here is the exciting part. What I'd like you to do is this. Once you subscribe to it, I'll give you the link again. Tell all your friends, everybody at work, everybody you know, share it on social media to do the same thing. You don't have to watch my music shows. You don't have to join me on a Friday night concert. Every Friday we have a concert. Look at it rolling around now. But what you can do is this. Once you've done it, get all your friends to do it. When I get to 10,000, come back to me and say, Martyn, You're now at 10,000. My business, my friends, my family, whatever, we love to support, help the aged, save the children, people in war zones, whatever it might be. Would you do a fundraiser concert in our name? Because we subscribed to you, we helped you, would you help us? And I will say yes. I will do unlimited concerts. Remember, I work harder than anybody else. I will always work harder than anyone else because I absolutely love doing this. I'll work 24 hours a day. I don't care. Okay, I love it. Sleeping is boring. I love it. Okay, so come back to me and say we've done it, and then I will do a concert for you. It'll be the event, the video, the live stream. It'll be connected to your charity. You'll see it on the screen so you can claim back taxes when you donate or watch or whatever, or you don't have to do anything at all, and all the money will go directly to the charity. It's very exciting, right? And we're going to raise millions. Be there to get me to 10,000 so I can do this as quickly as possible. Quacker Gaming just subscribed to the music. Thank you. 6,090. This is absolutely wonderful. Thank you ever so much, everybody who's done it. I hope you've all done it. I've got 30,000 subscribers. Oh, there's another one. Neil, Illinois. Make sure, Neil, that you tell all your friends, your colleagues at work, to do it at school, wherever you are, to do it, and then come back to me, message me in a live chat or whatever, and say, would you do a fundraiser for XYZ? And I will do it. All right, one last time, there's the music link. Thank you very much for listening to me. I appreciate you. Remember, I get nothing out of this other than the pleasure of doing it. I will do all the work. I will host the events. I will promote it. I will provide the studio, the power and everything, and I will earn zero. All I will get is a YouTube channel with eventually millions of subscribers, knowing that I've raised millions of dollars around the world for charity. That makes me happy. I don't need anything in return other than that. So there we go. Thank you very much indeed. That's amazing how that's rallied there tonight. Right, let's go back to the stocks. NVIDIA. Let me see if my NVIDIA audience is still with me. They are. We're about to end the show when we ring the bell because we've got two earnings. Two earnings tonight, two earnings in the morning. Now, this is a new service that I'm providing for my members. Let me give you a link if you want to become... In fact, I'll give you the links now. Here's Alpha Spread. All of my members can get the best AI software for free. Or you can use the premium service with my discount, which basically makes the membership for free. There's the membership link. If you want the members-only live streams, members-only chats, members-only comments, you can book earnings, you can book reviews on stocks, all of those things. There's Instagram, where I talk to my CEOs, my friends in Wall Street, the connections that I have. I share it all with you. There is the Facebook. There is the X. I put all my trades before I make them. There is the all links if you want the website, the birthday card, the Christmas card. Remember, if you are a member, you also get a birthday concert, as a birthday song as well. There's the extra channel where we're live 12 hours a day. If you want the training for Ed Nevius, scalp trading, we don't charge for it. There's not a never-ending coupon code like Meet Kevin tomorrow, sign up tomorrow. It's all free. I give it away. We provide it for you for free. It's on Discord. If you want that, you can. There's the link for Discord. If you sign up for Discord, you will not see any channels unless you become a Discord subscriber or you are a YouTube member. And then in the chat, tell me your username. I will upgrade you manually live on the show. And then you'll see everything, all right? We're not trying to grow the biggest Discord. We only do it for members. We're not trying to get everybody, millions of people to follow us. We just want a handful of people so we can do it properly. All right, there we go. There's all the links. Now then, somebody asked me, should you buy and sell? I did say rewind the video and look out for the video I'm putting out shortly. That's the best I can tell you. Now, if you do want more support than that, if you are a member, you can call in anytime you can call in live to the show. It's a members only perk, but if you want to call into the show, you can call in, and you need to be on camera so you're not pretend to be somebody else. Thank you, Gary Hill. You can call in after the show and we will answer your questions. Everybody will give their opinion. We'll debate it, and then we'll understand what your situation is. So you can call in and have a conversation like the Dave Ramsey show. You can call in, talk to me, and we can do that. But for me to just make a wild guess what you should do, we cannot provide that service. That's just not possible. Right then. We got to 6,093 subscribers on the channel. A few people have set up accounts and they're unsubscribing. Look, we've got a few trolls now today. It's just gone down 4. Unfortunately, there are some very sick, sad people in the world. Fortunately, most people are nice. But what we get now, we do get this. As we get bigger and as we're trying to help people, we get people who think it's funny to try to take away from people, and they think it's funny. I don't know why you would do that. But then, of course, if you live a miserable life, and doom and gloom will come to you, because obviously if you're always trying to bring down things and stop people from doing good things, inevitably bad karma is going to smack you in the face. So carry on doing that. It doesn't bother me at all, because I know we're going to do it. We've never missed a target yet. In all the years I've been doing this, about 39 years that I've been touring, and I left home at 16, and I've never yet failed at anything. So we're not going to fail at this either, no matter how many idiots try to stop it. Okay, 2 minutes to go. We're about to ring the bell. Now, this is what's going to happen. We have got 2 earnings tonight, a new service that we will do 2 earnings in the morning every day, 2 earnings in the evening every day. And if you are a member, you can choose the earnings. If you're not, and a $5 super chat. If not, I will choose for you. Right, just saw your music videos. Really good. Thank you very much indeed. Well, another thing that we do, if you're interested, Louis Goy, is on Friday, the Closing Bell show. It's called Stock Price Prediction and Party. At the Closing Bell, what time is it? The Closing Bell at... I can't remember. The Closing Bell time. 2 o'clock Central Time. We have every Friday now. It's a new thing we're doing. We do the Closing Bell show. And what we do is we do it on the music channel. So we spend 2 hours doing price predictions of the upcoming week. You can phone in, you can be part of it. And then after that, we get drunk, have a few beers, and we celebrate the Closing Bell at 4 p.m. Central with a party. Right, okay, we're about to ring the bell. How am I, How are you, Martin? I'm very well. GAR. GARM 3NT. I'm very well. Lovely to have you here. When margin comes to Robinhood UK, I shall use it to buy the S&P 500 on dips. Up $2,500. Amazing. Great. Wow. Asti slammed down today. Yes, that's because of a reverse split. Just saw your music videos. Thank you very much indeed. Better out than in. Bless you, Martin. It's a bit embarrassing though, wasn't it? Right, here we go. We're about to ring the bell. Look out for volatility in the morning. I'm not selling a thing. This is my portfolio. I am now at a grand total of 104,000. I started with 5,000. I've never shorted a stock. I've never done options. And now, for the last 8 months, I've not sold a damn thing. Meet Kevin said the world would come to an end. And millions of you watched it. And guess what? It never happened. There you go. The bell has now gone. We are into extra time. So here we go. We have, in 9 minutes, we have ACHV earnings. ACHV earnings. We are covering this in 9 minutes. Achieve Life Sciences here on the main channel. On the extra channel, we are covering Mercury Systems live at the same time. 2 earnings every day in the morning, 2 earnings every evening for you live. So we are really against the clock right now. Earnings are not going to wait for me. Shame, innit? but they're not. They're not going to wait for me. So what we're going to do now is send everybody to the extra channel so I can end this stream, restart the new stream with the earnings, and then the extra channel will give you the option of staying where you are for the extra earnings, or you can be switched to the main channel. Okay, so here we go. Let me send everybody now to the extra channel. Think of it as our green room. So here is the extra. I've got to be really, really quick. Here is the extra. Okay, here we go. Extra live now. Join us on the extra channel. Okay, now it's free for everyone to watch, but it is a members only channel because all the investors every day share trades, information. It's live 12 hours a day to provide support. And with the reason why we have members only, it's 99 cents. That's all it costs to stop all the bots, the scammers, the trolls coming in saying buy Binky Bonk. We don't want any of that rubbish. We want real investors with real money buying real shares, sharing their real positions, okay? So there is the extra channel. There it is. That's where we're going to go now. I'm going to send you there now automatically. Bloody hell, we've had 1,000 people for this stream. That's our busiest ever Tuesday closing bell. We're now ranking 1 and 2 in the world for NVIDIA. I can't believe it. We started this channel 3 years ago. We've only got 30,000 subscribers. And here we are ranking for the biggest stock on planet Earth. I can't believe it. Anyway, it's brilliant, isn't it? I can't believe it. Right, here we go. Extra channel live right now. Yes. That's where we are. I've got to really go. I'm sorry for rushing, folks, but I am against the clock right now. Live right now. Yes. Okay. Cancel. Yes, that's done. Damn it, I did it twice. Going too far sometimes. Right, there we go. Right, let me send everyone. This is the extra channel. This is where we are behind the scenes. We're going to go there now. I'm going to end this channel show, start the new show on both channels, and you can be part of both earnings or choose the one you want. Bringing you new stocks, new businesses every single day. Right, here we go. Let's do it right now. Not that one. Right, that's it. Join me now on the extra channel. Thank you ever so much indeed. See you back there. 2 earnings tonight, 2 earnings in the morning, and then we got PPI. It's going to be an explosive evening, no doubt about it. The morning, I beg your pardon. Right, let me end the stream now. Okay, come and join me on the extra channel as we start our earnings. 2 earnings back to back. Are you ready for a fun evening? Till then, as always, I love this job. Take care of yourselves, and it's not a job. It's a laugh. It's a laugh making money. Easy to make money, hard part to keep it. Take care of yourselves and each other. All right, see you back in a bit, folks. Bye-bye for now. Okay, so here we go. Let's get this show turned around. So the first thing that we need to do is we need to go into the earnings for Achieve Sciences. That's what we're covering here. So hi, everybody. Put that down there. Achieve Sciences. If you're on the extra channel now, you can hear me. You should be able to hear me. Yes, you are. YouTube. Yes. Achieve Sciences. There we go. Let's come back to there. So we want ACHV, Achieve Sciences. Okay. That's good. Everybody's with me here. Okay, so here we go. ACHV live now. I'll give you the link for this. Here we go. I'm just going to bring this to you now. ACHV. That's for there. So here is ACHV. Just stand by. We're doing 2 earnings at the same time. It's going to be quite exciting. We love it. We love it. Okay, there we go. Okay, let me get that there. I see Mike already in the chat. Thank you very much. I'm about to give everybody the link. We're doing 2 earnings at the same time. It takes a few minutes to get the shows turned around. So just please bear with me. Okay. All right, here we go. So here is ACHV live now. There is ACHV. That's on the main channel. I've just given you that link there now. And on the extra channel, where you are right now, I'm going to give you the other one. You could choose to watch Mercury if you wanted to. This is Mercury. Mercury. On extra, Mercury. There you go. There's Mercury. Right, so now we're going to end the stream. That's now set. Do my face. There you go. ACHV. Achieve Life Sciences. Frederick, welcome to the special guest on the extra channel. So here we go. So I've got to get ready now. Achieve Life Sciences. I've got all the data ready to go. The earnings, we've got a little while to go. That's at 20 minutes before that starts. I've got that. I don't need that anymore. And I do need ICL. Let's shut that down. Mercury. This is on the other channel. I'm listening into that. Okay, that's good to go. Mercury has just popped up 15%. Mercury's just popped up 15%. All right, here we go. So let's change this here now. The extra channel, I'm about to end the extra channel. Let's switch here, switch account to the extra channel. The extra channel is going to take you to the next event on the extra channel. Stay right where you are. So here we go. We're going to control that there. Send you here automatically. Customization and redirect you to Mercury. Yep, that's right. Okay, all good, good, good. Let me now just end this then. So that's going to happen right now. We've got to start very quick because it will start in a minute. Okay, here we go. So I'm going to end it now on this, and it will go automatically straight into the Mercury, and then I will give you the link to join me for the other channel. Here we go.